Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for June 23rd, 2019. I hope everybody's having a great weekend. And we have obviously a lot to talk about this week. Some major breakouts occurred, so we're going to discuss those here in just a moment. But first, I have to mention, if you haven't tried out ForexAnalytix, remember it's only $1, $1 for 10 days. Try it out. What do you have to lose? $1. All right, when you try it out, make sure you download the mobile app. And when you get the mobile app, make sure you get it off the App Store or the Google Play Store. And this way you get all of our notifications, our exclusive ForexAnalytix chat room. You get everything on your mobile device. So no matter if you're at your desktop or not, you get all these notifications and new updates that we send out, and you can chat with the community and see what they're up to, even if you're away from the computer. And that's what a lot of people leverage ForexAnalytix for, is kind of getting updates on the go when they're not in front of their they're not in front of their computer as well. All right, so we're going to go to the dashboard, and let me move the data flash here, which is our real-time news service. I'm going to move that out of the way. It is completely out of the way now on a other monitor. Let's talk breakouts. Major breakouts. The biggest breakout, I'd have to say, and if you were listening to the live webinars throughout the course of the week, and you were you were following us, and some of the trades that I did personally, and I know a lot of people in our community, is the big breakout in gold. And you can see the massive breakout that had happened. Now that gold is above 1375, 1380, that was the breakout point. And my opinion is any move back towards 1375, 1380, 1370, you're going to find buyers. Now, the question some of you may be asking at this point, now that you see this breakout occur, is, are we going to head back there? I mean, it was such a big breakout. I would assume that we are going to at least consolidate, if not pull back. And that was one of my trades of just the end of this last week, was looking for a consolidation, because gold never pulled back. It was an intraday triangle that developed, and I had to get long again. And that tends to happen when you have these big breakouts. And I'm going to assume that there will be some sort of pullback or consolidation. And the reason why this is, and I'm going to, well, there's a lot of reasons, but here's the one that really sticks out to me. And I have this saved for you guys. This is our daily sentiment index, not ours, but one that we subscribe to. And it tells us when the market is extremely bullish sentiment or bearish sentiment. And in this case, let me just take you over to, where's gold? Gold registers 94 current on the current, well, that was Friday's reading on daily sentiment index. Now I've seen daily sentiment indexes move even more extreme than that. That's just telling us that the bulls are major extremes. Anytime you're above 90, it's extremely bullish, but to a point where it's so extreme that you might see a reversal. And we are above, obviously, 90, and I've seen them go to 95, 96, but I would assume that has to taper off a little bit before we see another leg higher in gold. And so what that probably would mean, oops, let me go ahead and minimize that. What that's probably going to mean as far as price action goes is we're probably going to see a little bit of a consolidation or pullback in gold, maybe towards that 1370, 1380 level, before a resumption of an uptrend. So just be careful, I think, chasing the market higher in gold. I do think it's going higher, but I think you have to be a little bit patient with the price action. But that hasn't stopped moves before. Daily sentiment doesn't. It's the same thing as if you're looking at relative strength and you go, wow, look at that weekly RSI in gold. It's so extreme. It's got to pull back. It doesn't have to do anything. It can continue to break out. And that's the one thing that I've learned over the last 22, 23 years of actually trading the markets is that even as indicators register overbought or oversold, that doesn't mean that they can't continue. And that goes the same with sentiment index. I mean, the DSI is a very similar indicator that any other technical indicator, whether you're using an oscillator or relative strength, any type of indicator, it could suggest that you're overbought or oversold, but doesn't mean that price will necessarily stop. But it is heeding a word of warning to all of us that sentiment is a little extreme, so we have to proceed with caution. But I am extremely bullish gold right now, and just for the record, I mean, let's take a look at I'll take you over to my gold charts really quick, just personally, so this way you can kind of see what, because I didn't do these drawings here. Here's gold, and if you go over to a weekly chart, gold, in my opinion, looks like we're heading towards this 1447, maybe eventually up towards the 161% extension of this last move, which if you actually take from the high to low in gold, this high point right here to the lows right over here, the 618 comes in close to 1600. You can see a lot of support, previous support over here. So I'm assuming between 1550 to 1600, you're going to find a lot of resistance, but that's a lot of room between 1400 where we're currently at and 1550. I mean, that's a pretty big move in percentage wise terms. You're talking, that's another 9 or 10% higher in price. So don't think that gold can't go higher. I really do think it can continue higher. You just have to be a little bit more careful trying to buy rallies versus chasing price. Buying dips seems more of the logical trade. Now, with the big breakout in gold, and we've been anticipating that for the last several weeks here on the ForexAnalytix team and the face webinars, on the week ahead videos. Recently we've been looking for that gold breakout, and obviously that's going to bring, and it's going to usher in dollar weakness. And now if you look at the dollar index, we have this big double top here. The double top extension actually extends us even further than where we're at. We're at 96. That could take us all the way down towards 95 or 95.50. So the dollar index looks broken. Does that mean you should, short the dollar right at the open? I don't know. I think that you're going to get opportunities to sell the dollar. Now the question is, where do you do it against? Because that's obviously when you're dealing with all these different currency pairs, you have choices. It's not just let's sell the dollar against everything, a basket of everything. You probably want to be a little bit more selective. And with this next week, for example, we have the RBNZ rate decision on Wednesday morning in New Zealand, but Tuesday night for most of us. That could, alter your decision on what specific currency you want to trade against. But I look at the euro dollar specifically, and if you look at the chart pattern that we had a descending wedge. For those people that know me personally, it's my favorite setup. And as I explained last week in the week ahead video, and let me go over to my charts because I didn't do the weekend analysis. I do the analysis throughout the course of the week, but the rest of the team does it throughout the on the weekend. Mostly Steve in Athens, he does it. But if you recall last weekend on the week ahead video, so if you need to go back and listen, I was torn because we had this false breakout here, what looked like a false breakout, but I said, if you adjust this trend line and you drop it towards the spike highs that we had here and the multiple touches, we're actually just, this was a false breakout. We are just retesting that trend line, and that argued for a bullish move in the euro. And now we see that move in the euro develop. We're above the 200-day moving average, closing above the 200-day moving average this week. was really a key development for euro bulls and dollar bears. Obviously in the dollar index we closed below the 200-day moving average as well, and that's going to elicit some selling of dollars in the coming days. So does it make sense to just buy the euro at the open? Probably not. I'm going to look to buy dips, just like gold. I'm going to look to buy dips there. But I think that dips will be shallow, and if the euro can get down towards 113, excuse me, 113 and a quarter, I think that's going to offer a great opportunity to be on the long side personally. There, and if you look around, you look at some of these other currencies, like you go over to the cable. The cable is running right into some major, in my opinion, major resistance. You can see this resistance zone comes right through here at 127, basically 127.70. We break out above 127.70, 128. We could see a rally back towards 130. Look, Boris Johnson more than likely is going to be the next prime minister. What does that mean? Well, it means that a hard Brexit is probably in the cards, and there's a high probability of it. The market knows this, yet the pound is rallying. So could you argue that the cable has really priced in the worst case scenario? I think that there's an argument to be had there. So what if a hard Brexit doesn't happen? Where does that take the cable from here? I wouldn't want to be short. If I always try to take into account what the person on the other side of a trade that I'm looking to take or I'm in, how they feel. If I was long the cable, which I'm not, I'm just giving you guys a theoretical situation. If I was long the cable, I would ask myself, if anybody's short the pound, how do they feel? Well, taking into account what I just said, Bojo's going to be the next prime minister. Hard Brexit, everybody knows it's coming, or there's a good chance of it coming. Yet the cable is still rallying. If I was short, I'd be like, yeah, I don't know if I really want to be short anymore. So that puts the buyers right now in the driver's seat, and I think above 127.70, 128. Yeah, I mean, we could see 130. There's a 200-day moving average not too far away at 129 and a quarter. 130 is obviously the big round figure. It's been a level of contention for the cable a lot. We could go back and see that area again. I don't think that's really with gold breaking out and the dollar index breaking down. I don't think that's going to be unheard of. You take other currencies like the Aussie. The Aussie, I mean, we're approaching some pretty key resistance here in the Aussie dollar. We get above 70 cents. It could be a squeeze. We're one headline from trading up to 74 cents. All you have to do is put a China-US trade deal together, and the Aussie will squeeze the heck out of anybody who's short. So you have to be really careful there. I know I've mentioned this a lot, but especially on the free webinars throughout the course of the week. But if Donald Trump really feels that his second term is at risk due to the friction between China and the US, he might be a little bit more, adamant in trying to get a deal done quickly, or at least making the market believe that a deal is done or near done. And like I said, that could kickstart any short covering in the Aussie really fast. And then the 200-day moving average comes in around 71 cents. We break that, and like I said, we are just a few headlines away from trading up towards 72, 73, 74 cents. It's not that far away. So with the Aussie, we also, one thing that you have to keep in mind is we had a false breakdown over here, but those lows, you can see that most recent low. Let me go over to my charts because I can actually zoom out on those. That low was a pretty significant low, because if you look at the lows from, what is that, January of 2016, we basically tagged that low and reversed. And like I said, if you're short, you're probably starting to think, yeah. I mean, we get above the 618 right here at 69.50. That could really start to squeeze some people. Remember, gold is breaking out. The dollar index is breaking down. the Aussie has a pretty strong correlation with gold, we could see a continuation in the Aussie dollar as well. Kiwi, just keep in mind that we do have the RBNZ later this week. The Swissy is broken down pretty aggressively. Take a look at the dollar yen. The dollar yen looks extremely bearish. And if you're in the camp, and I'm going to show you the S&P here in a second, but if you're in the camp that says, the S&P has definitely topped here and it's going down, which I don't know necessarily agree with that statement, but I'll go into the S&P here in a moment. If that's what you believe, I mean, look at the dollar yen. I mean, this is, looks like we can test this low that was set back on, I think that was January 2nd. We could very easily, slip below 107 towards 106, maybe even lower towards 104, 105 again. Again, with with gold breaking out, that is typically bearish the dollar, but also if you look at the correlation between gold and the yen, that's a very positive, strong correlation. So as gold goes higher, the yen tends to strengthen as well. Throw in some geopolitical risks like Iran and whatnot, and yeah, you could have a dollar yen that's trading down here pretty quickly. All right, one last thing I wanted to share with you guys. Now, remember, if you like this. If you like this video, you think it's going to be beneficial for you going into next week, make sure you click the thumbs up button. You subscribe to our YouTube channel so this way you don't miss any of our interviews. Yada yada yada. Just make sure you do that. I wanted to mention that before I wrap up with the S&P. A lot of people are speculating. Oh, we hit highs here in the S&P, and this must be it. We can't go any higher. Frankly, I think we're going. I think we have a date with 3,000 in the S&P, and I think maybe even a little higher towards the 127% extension at 30 and a quarter or 30.28 in the S&P here. I don't think I'd want to be short, especially if a China-U.S. trade deal gets done, or a China or a U.S. Mexico deal gets done, or whoever. I don't know, or maybe the U.S. goes easy on Europe and things get sorted out quickly. We could trade a lot higher in the S&P. I think there's a lot of people that are probably short against these highs, and you might get one last gasp where the market starts chasing the S&P higher. Maybe even a lot of retail. If everybody thinks that we're past all the worst case scenario, or past the worst case scenario, and people start chasing the market higher. I mean, personally, I think that the S&P, any gains, especially above 3,000, are probably going to be short-lived, because frankly, if you look at the global economy, data has been worsening globally. So I think we are looking at a global slowdown. So even on positive trade news, I think that the S&P may cheer it short term, but I do think that globally the economy globally is slowing down. So I don't think I'd be wanting to chase higher the S&P, but I would say that there is risk of a squeeze higher in the S&P, and if that happens, that's going to only weigh on the dollar index even further, because the dollar tends to rally during periods of risk aversion. When you have risk appetite, the dollar could slump even more. And again, you look at the dollar index, and the dollar index I'm going to give you a roundabout figure. Double top points to roughly in the dollar index 95.50. 95.60, and we could overshoot that and retest this 95 level with the dollar index pretty easily. I don't see any reason why we really can't, especially if the S&P continues higher. But anyway, those are just some of my thoughts going into this next week. Also, I should mention there are a few other things happening this week, not just the RBNZ. We do have durable goods orders on Wednesday in the U.S. In the U.K., there's inflation report hearings actually Wednesday morning. We have G20 meetings at the end of the week. We have final GDP numbers in the U.S. on Thursday. We have inflation data for the U.S. Actually, I'll take that back. We have inflation data for Europe, which is going to be important. Also, PCE, personal spending, consumer sentiment at the end of the week. We have Canadian GDP. Also, we have UK GDP on Friday as well. So, a majority of the data coming in towards the end of the week. So, and then it's also the end of the month, which could bring further volatility as you get some position squaring into the end of the month. So, guys and gals, it's going to be a busy week. There are major breakouts that have happened in this last week. So that's obviously got all of us on our toes. Let's just hope that this volatility that we're seeing in the currency market continues. Volatility is good for those of us that trade the markets for a living. And I know we just hope that it's going to continue going into this next week. So once again, if you guys like this video and you think it's helpful, make sure you click the thumbs up button on YouTube. That always makes us all feel a little bit better about delivering these free videos for you each and every week. Once again, my name is Blake Morrow. I'm with ForexAnalytix. Make sure you try us out. I'll talk to you tomorrow morning on the FACE webinar. Remember, that one's free as well. We'll see you then. Have a great remainder of your weekend.